Few people in Australia would know more about our wheat crop than Ron Story from Australian Crop Forecasters. Ron Story has just finished an on-the-ground survey of cropping conditions throughout Victoria. But the first question I put to Ron was about the national wheat crop.
Yeah, look, it's a very good crop, Kerry. I don't think we're going to top the record back in 03-04, but it's a very good crop down the east coast, although West Australia has fallen away badly in the last couple of weeks.
And can that WA crop be saved, or is it just too late?
It will benefit from a rain, there's no question about that. But we're down to somewhere between 4 and 5 million tonne for the wheat crop over there now, and that's about half of what they got last year. So it will be a very poor crop in Western Australia.
But we have, in fact, been saved by good crops in South Australia and up and down the east coast.
They do. It looks a very, very good crop. We've seen a good chunk of it, in fact, over the last couple of weeks, right through Victoria and up into northern New South Wales and on the Darling Downs. And some of the crops are fantastic, which is great to see after such a run of bad seasons.
Ron, we're seeing a lot of market chatter about inadequate infrastructure to handle this bumper crop, especially rail. Are you seeing evidence of this?
Look, that's right. I think when you get a crop of this size, and as a result of the last 10 to 15 years, we haven't had great, if any, investment in rail infrastructure as far as the grain industry is concerned. Most of those resources have gone to the iron ore and coal businesses. So there's no doubt that the logistics will be stretched to handle this size crop.
Well, that sounds like there'll be a lot of on-farm storage at least.
I think there'll be a lot of on-farm storage, and I think there'll be a lot of bunker storage provided by the main bulk handlers, because I think the current standard system won't be able to handle it all. So we'll see quite a bit of temporary storage go in.
Will those infrastructure problems carry through to the ports? I mean, can we see any problems perhaps with shipping?
Well, the port capacity is not so much of a problem. There is capacity there. It's more a question of the rail capacity to get the grain to the port over a confined period of time. So we're going to see some spillovers, if you like, at harvest time and a full shipping program, I would think, right through the first half of 2011, which is good to see, but it will be stretched.
Now let's go to your tour, a recent tour of Victoria. I presume it looks pretty good in that state.
Yeah, it is. I was up through the Mallee and through the Wimmera last week, and just very, very good crops all the way up to Mildura. So it's looking good. People have obviously got their eyes on the grasshoppers, which is worrying them. But if we get over that hurdle, it'll be a very, very good crop.
And I see reports of the big dams filling up. What about the on-farm dams?
Yeah, they're full too. Through my own home territory in the Southern Mallee, the dams are full and the crops look very, very good. And the canola's out in full flower. It's a bit of a picture at the moment.
Ron, I guess when there's a lot of rain, the positives will always outweigh the negatives. And you mentioned the locusts. Any other negatives in Victoria?
Look, I think the big issue this year for the crops is quality. The volume is there, we know that. It's going to be a quality game. There have been some quality problems overseas with the Canadian harvest and things like that. So Australia really needs to bring in a good quality crop and not have weather damage at harvest time. And that's probably the biggest risk that's hanging around at the moment.
Yes, if that wet weather continues, there could be a lot of feed wheat around.
Well, it's already started, of course, in central Queensland. The harvest got underway a couple of weeks ago there, and there's been big rains there and there's already some downgrading, so we don't need to see that travel down the east coast.
Let's look at prices, Ron. There's a lot of sideways movement at the moment, but is it fair to say the wheat price is softening perhaps?
Look, a little. I think we had a big run up there about a month ago with the first news of the Russian drought. And then some harvest problems in Canada, but things have settled down a little now. The weather's a bit kinder in the Northern Hemisphere. So, yeah, we've gone sideways, and, of course, the very, very strong Aussie dollar has been taking the cream off the top in the last week or so.
Yes, that dollar is a problem. What's your best guess for the months ahead, Ron? Should farmers hedge on the current price, or should they take a punt on what the spot price might be around Christmas time?
Well, that's the imponderable and the crystal ball that everyone wants, Kerry. I think that it's fair to say that grain prices are solid, I think, for the next 6 to 9 months through into the middle of next year. But I think there is scope for some downside. If we get a good crop here, the Argentinians get a bit of rain in the next week, and the Northern Hemisphere get their winter crop planted, then there's no real incentive to see prices go higher as far as wheat is concerned. I think coarse grains and feed grains are a little different. The balance sheet for corn around the world is much, much tighter, and I think it's more likely to provide a bit of underpinning to wheat prices.
Ron Story, thanks again for your time on Landline.
Pleasure, Kerry. Thank you.
Now let's see what's happened with wheat prices over the past week, and the bearish sentiment continued in Chicago as American production figures confirm this year's crop is up on last year. The fall was slight and corn fell as well because of a not dissimilar production report, that is, better than forecast. While soybeans provided the contrast, the market lifted against a background of strong export demand. And locally, the ASX finished the week on a firm note. WA wheat for January is getting close to $300, while milling wheat for the same month on the East Coast settled just above $260. And the spot prices all fell. There's a guessing game at the moment on downgrades. Farmers think they're growing milling wheat, and graziers reckon there'll be a lot of feed wheat around. So wheat, canola and sorghum drifted south, but in relative terms, those prices are solid 20 to 25% above this time last year. Now let's check livestock, and the rain in the east is doing two things. Prices are up because of restocker demand, and producers have plenty of grass around so they can hang on to stock for finishing or herd rebuilding. The Queensland wet through September pushed sale yard numbers down by 30% on August. On the other hand, operators think the quality of cattle around at the moment is the best they've seen in years. Trade cattle lost that spike they had last week, but other categories lifted. Lot feeders were active, so feeder steers lifted 7 cents, and the action across the board left the Eastern Young Cattle Indicator at the outstanding level of $3.75 a kilo. And the live trade continues despite the problems with Indonesia. A lot of the bigger boys are sending those big cattle south and seem very anxious to get away as many as possible before the start of the wet season. Prices out of Darwin remain strong, and no doubt some steer contracts would have been written closer to the $2 level. And the lamb and sheep meat market continues to soften as yardings come back to normal levels, and some processors have reduced kill days, so competition is not quite so strong. So lambs dropped 12 cents and mutton fell 21 cents. It's worth noting that lamb price is 50 cents up on last year, and the mutton price is up 80 cents on 2009. And dairy prices are firming. The indicative Oceania prices are starting to lift after several quiet weeks. Market chatter is about possible big-time Chinese investment in the Australian dairy industry. Now let's head to the New York Board of Trade for the soft commodities, where we find sugar has firmed again, although the further out contracts are down, and it's the same story with cotton. The March contracts will come back a great deal. Mind you, prices still remain pretty good in historical terms. Finally, to all, where the chief influence on prices remains our strengthening dollar. This is because the Chinese renminbi is linked to the US dollar. Now, last week competition was strong despite the currency issues, and the market finished actually up by just under 1%. The Eastern Market Indicator closed at 875 cents a kilo. And that's the Landline check on prices.